So the next problem is a lengthy problem here. So we have balance sheet separately, trading account, profit and loss account separately, and we also have the answers here. Okay, answers are also given, and we are required to calculate these ratios. So operating profit ratio, ROCE, net profit, current ratio, quick ratio, turnover ratio. Turnover ratio they have put, I think it should be asset turnover ratio. Only when we do it, we'll know that. And the period ratio, days. Okay, we have to do it for, sorry, I think turnover ratio and the period ratio in terms of days for inventory turnover, debtor turnover, working capital turnover, or fixed asset turnover. Okay, so they are asking uh, 5 turnover ratios they are asking, then debit equity ratio and the interest coverage ratio they are asking. Okay, so first we'll set what are the various ratios they are asking. So it is operating profit, ROC. So this is not there. Okay, so we do not have gross profit ratio. EBITDA is not there. I think in current ratio both we have to do, right? In liquidity ratios we have current ratio, quick ratio. Here all the inventory, receivable, payables is there. Conversion is not there. Then working capital and the fixed asset turnover ratio is asking this, and finally they are asking debit equity ratio and interest coverage ratio. Okay, so these are the ratios they are asking. So we will work out these ratios. So it is up to you whether, if you want, you can do the sum in terms of thousands. You can cut the last 0 and get the answer. Then also the ratio will be giving you the same answer. So if you don't require the cutting of zeros in thousands, if you don't want to calculate, you can calculate also the full value and you can get the answer. Okay, so we'll start from operating profit ratio. So let's see whether the company has operating profit ratio. The answer is no. Okay, the company does not have operating profit, so we only have to compute it. So we'll start. So if you take operating profit, it's going to be the gross profit 6800 minus the administration expense, right? Thereafter selling expense. Okay, and selling expense I have to deduct. So selling expense is 600. Okay, so there is another non-operating income is there. I think that that box is blank. And interest, other non-operating expense, again see here as a non-operating expense. Interest is also a non-operating expense, so those will not come here. Okay, so we'll just have to find out this. So let's get the net profit ratio. So if you take net profit ratio, I think it's quite easy, so we can find it out directly. Okay, I think there's some mistake in the profit and loss. Okay, because it shows here 68 lakhs and finally it shows the 30 lakhs here. So that means 38 lakhs should be this amount, but it is like beyond that. It seems to be a lot more than that. Okay, it is like 36, 39, 39 and 80,000. Okay, 39 lakh 80,000 is there. So I think there should have been some kind of an non-operating income should have been there, but we don't need to worry about that. Whatever like given, we'll work it out. Okay, whatever is like given, we'll work it out and get a answer. Okay, so see, we are only trying to find out an answer. We are not trying to find out any analysis we are doing here. So let's, okay, what was the net profit? Net profit is, so we got the answer. Let's go for ROCE. So in ROCE, we know what is the operating profit. Operating profit is 3,200 divided by capital employed. So that is around we have to find out. Capital employed, we have two formulas. So we can use whichever formula we want. I think we'll use the first formula itself. We'll get the total asset minus current liability. There is only one current liability here. So it is, okay, let's solve it. So we got 45% as an answer. So let's start with liquidity ratio. It is current asset by current liability. So let's take current assets. Current assets here seem to be the stock, okay. So it's going to be stock, debtors and cash divided by creditors. Okay, so let's get the answer. So the answer would be in terms of is to 1. So let's get the quick assets. So in quick assets, you will not have the inventory alone. Okay, so inventory alone, you can remove it. So thereafter, you can get the answer. So this also should be in is to 1. So we got that also. So we have the activity ratios. So for activity ratios, we have to get a lot of numbers. So we'll start. So first we have to get COGS. COGS will be like equaling the GP, okay, the gross profit sorry, sales minus gross profit, where that would be So this is our COGS. So thereafter we can find out we have found out COGS. Inventory is quite easy to find out. That won't be a problem. Inventory is here. So it is 2960. Okay. So in terms of days, if we are going to compute, it would be 365 divided by 3.4444. So let's get the answer. Answer is 106 days. Then we'll move on to the receivables. In terms of receivables, if you take, it's going to be credit sales. So there is no credit sales here. So you have to make a note again, note which is saying assuming all sales to be credit sales. So we can get the sales. Sales is debtors. Debtors is again is available 1420. So here it would be 365 divided by 11.97. It comes to 30 days. The next one is payables turnover. So here if you see there is no credit purchase, so assuming all COGS to be credit purchase, okay, we can't have any other number. So COGS we have computed earlier itself. So COGS is around where we got it. So here it is. So COGS is 10,200. Payables is going to be, creditors are 2,600. So we got our turnover. So we got the answer. It is 93 days. Okay. So we have almost got all the numbers. So let's see what are the things which are missing. So we'll find out the fixed asset turnover ratio. These are like quite easy. So our sales is 17,000 divided by fixed asset alone. So fixed asset alone we have to find out. So fixed asset are these two numbers. Okay, so we'll start. So the answer will be in times. The next one is also working capital turnover ratio. So we can't say it is average, sorry, it is net only. Okay, we'll put it like this. I think that would be great. So we got our sales. What about the working capital? So the working capital is CA minus CL. So CA minus CL, I think we can get it from here. So we can copy this and we can get the answer. So first what we'll do, we'll get the working capital number. So working capital is CA minus CL. Okay, so let's set the working capital number. Working capital is 2400. So we'll go to the debt equity ratio. So in debt equity ratio, we have long-term debt divided by equity shareholders funds. So long-term debt, we have to find it out. So long-term debt is this. Okay, debentures divided by equity shareholders funds are this amount. Okay, so we'll get the answer. So we got the answer. So it is to 1. And finally, we can find out the interest coverage ratio. So it is operating profit divided by finance or interest. So I think we'll take interest. First, we'll get the operating profit. Operating profit is 3200 divided by interest. So interest we have to search. So we have the interest here. So we got the answer for all these. So just to highlight them, we'll bold it. And we'll reduce the zero, sorry, after decimal. We'll just round it off. So that's about the answer here. See, we are not making any inference or any judgment about how the company has performed or anything like that. Okay, and the question has not asked for those things. So what we can do is we can end the question here. If you want, we can compare the answers. So operating profit should be 45.7. Okay, operating profit, I'm not sure whether these numbers are like perfect. Okay, I think it's not there. ROC at least 45.7. I think ROC is the 45.7. The other numbers are not like calculated. 1.92, 0.78, 1.92, 0.78 that we got. 4.1, 4.2. Okay, they have found out this as 4.1, I think. I'm not sure, like, the answer is like perfect. So 12 is there, 12 is there. 4.2, I don't know like what they are meaning there. Okay, the meaning of it we couldn't decipher. 3.69, I think this is there, perfect. 0.094, I think that is this number. And interest coverage ratio, again it's not given. Okay, so certain numbers have been given. So either way, this is the answer. So this is how we have to approach a ratio analysis sum. So thank you guys for watching the video. We'll move on to the next sum also. Okay, we can do this sum as our next sum. Here the answers are like clear cutly given. They have been like clearly given. So